Good morning, folks. Hope everyone's having a good week so far. So let's kick things right off here. It is Taco Tuesday, a momentous occasion to all those who celebrate. And it's me, Markets and Mayhem. We're back for this edition of Back to the Futures, live order flow analysis using Bookmap, looking at futures, stocks, and really getting an idea of how positioning, options flow, liquidity are impacting price discovery in various markets. So first, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific advice nor recommendations. And a couple quick heads up. November's Blue Jacket winner will receive 3 months of Global Plus with stocks or futures data, 1 month of Discord Nitro, and a one-on-one coaching session with Tom B. And the funded webinar trader series is underway. Started yesterday, going through this Friday with Robert Rother, Scott Pulsini, and many others. So join the Bookmap Discord, check out what they have going on there. Great community, lots of good information to absorb. If one is interested in learning more about Bookmap, there's really no better place to start. And if you'd like to get a copy of Bookmap for yourself, you can certainly do so. You can get up to 40% off of Bookmap plans at traderaid.com/bookmap. That's traderaid.com/bookmap. Scroll down to the specials area to find those discounted plans. And a little bit about me. My trading journey began in 2005. I funded my own account and began trading stocks, then moved on to options, futures, commodities, and Forex as I expanded my horizons. In 2006, I started rolling my trading profits into long-term investments. I navigated through the great financial crisis, which helped me to better appreciate the importance of understanding intermarket dynamics, momentum, and macro. I also managed to get out of the way of the great financial crisis for the most part, but it was mostly luck and a focus on technical analysis that had me cautious. My own approach is systematic, driven by momentum, price action, options flows, sentiment, positioning, volume profile, and the big picture. I know it sounds like a lot, but it's really not. Once you systematize your trading approach, those all end up being weighted variables that you plug into a model. It's really quite straightforward. It's more about finding what weightings you want to put on various variables and then effectuating that in either Python or whatever your preferred framework is so that you can fire off signals or even to some degree automate your trading and risk management. So my approach as a result of being discretionary earlier in my trading journey is actually going the other way and becoming much more systematic. I find that a systematic approach to trading actually helps to improve my own outcomes, but also a lot of the folks that I teach about trading. It tends to help them as well. Learning more about being objective, using data, having a defined system or plan. It really does help a lot of people improve their consistency, set their expectations more reasonably, and have better confidence about what they're doing because they have back-tested data that supports their approach. So I began working with Bookmap in early 2022 because I saw great value in the way their platform displays market data. And I really like the overall approach. It's quite good. Being able to view stops and icebergs, being able to see liquidity at rest, where it was, where it is now. It's actually a really, really helpful platform. So if you're a day trader and you're not using Bookmap and you're trying to figure out where the missing link is in your trading, I would strongly suggest giving it a shot. And you can do so vicariously through me in this session. You can see how I'm using Bookmap. You can see if it's a good fit for you. And if it is and you like it, you can visit TraderAid.com/bookmap and scroll down to the specials to get up to 40% off. So you can get a good deal in your first time period of using Bookmap, right? I co-founded TraderAid in 2022 and MacroVisor in 2023 to share my experience, ideas on market opportunities, and education. I also build a number of unique tools and models and provide one-on-one coaching for traders and investors. So with all that being said, let's go ahead and get right into Bookmap. As we can see on screen, I just rolled the crude oil contract, so we can start there. Overnight, crude has had a bit of a tepid bid. We're just trading up to 69.17 this morning on crude. So this has been an interesting one to watch. I do think that the volatility of it makes it a somewhat exciting trading vehicle. For those that are trading futures, you know, there's a decent amount of vol both ways in oil. I think we do have some potential for upside from here. I think we've probably put in a near-term low, and I would be surprised if we broke below 65 anytime too soon. So we'll be watching. I'm more bullish on energy stocks than energy itself. And that just has a lot to do with the fact that I'm looking at these stocks and their resilience, how much these companies have improved their productivity, their balance sheets over time. And I'm looking at their relative strength compared to oil and saying, you know, they must think that these companies are going to continue to have some decent performance in 2025 if capital allocations are starting to come into them from more sophisticated institutional managers. And so the small and mid caps thinking they might have a bid from larger companies that are looking to expand their reserves, and some of the larger companies may in and of themselves be decent investment vehicles. So something to watch over longer time horizons would be crude and energy as a swing trade. But let's get into the S&P 500. It is under some pressure this morning. S&P 500 down 0.8% as we get ready to start the trading day here. Nasdaq down about 0.9%. Small caps down 1.37%. Dow down over 1% here. And the VIX, spot VIX up to 1693 at up 6.49%. One of the things I said recently on social and on the TraderAid Discord was we're just seeing such aggressive buying everywhere. I also did a presentation last night navigating the markets about this, that things are just getting stretched. So seeing some pressure to the downside is not entirely unexpected. It is a healthy part of how markets operate. They don't just go up, up, and away ad infinitum. They do tend to take breaks, and that is something that they should do. So, you know, I wouldn't get too concerned about that, but I do think that we could correct here for a bit. And that's just something to think about as we get into the last months of this year. And remember, you know, these tend to be good months in terms of seasonality. The problem is that seasonality really hasn't played a very strong role in price discovery this year. It's almost been the antithesis thereof that we've experienced with seasonality, that, you know, it seems like, oh, you know, October is going to be a really bad month or September is going to be a really bad month because of prior seasonality. And then the reality ends up that, no, actually these months are really good. So November is supposed to be really good based on seasonality. Maybe it won't be because some of that's been front run. Maybe it won't be because seasonality is not playing as strong of a role in setting prices this year. Whatever the case may be, we do need to keep an open mind. So if we're looking at sentiment, flows, and positioning, which are my favorite places to really look at the bigger picture of market dynamics, we could reasonably conclude that things are a little bit stretched here, that we could have some potential for downside. So something to take into consideration is just that stretched sentiment, flow, and positioning, and how that may impact price discovery outcomes, particularly in the most crowded parts of the market. So give me one moment. I'm just going to take a look at something here in terms of some of the pivots for the day. So one of the key pivot levels that I've been watching that is actually my pivot level for the week is 58.8225. And we are testing that level pre-market. And below it, I'm more inclined to want to take shorts down to 58.39. And we could even get down to 57.27.75. Obviously not an all in one day type of thing, but those are key pivots that I'd be watching intraday today. Particularly the 58.8225 and 58.39. Above us, we've got 59.64. Buyers tried to run us up there. That was part of my weekly market plan that I put out on Sunday on the Trader Discord, that we'd probably see buyers make an attempt up there. Obviously, we did not get there, and we're starting to see a bit more pressure. So I'm just taking note of some of these pivot levels for this morning so I can have those to share with you as we interact with them. So bear with me just a moment. All right. Got all that on screen. Eventually, I'll probably add that to Cloud Notes or something like that on Bookmap, but I do visualize it in MotiveWave, and it helps me to just be able to get a sense as to where there are decision points in the market. So again, for today's pivot levels, and I'm going to post these on Twitter so folks can see what I'm watching, but 58.8225 is really the key pivot level for me. I'd be bearish below it and bullish above it for today's trading session. And really, that's my weekly pivot. All right, I've just put that out there so it's on my feed for those that are so inclined to check it out just in written form. But in essence, I'm going to be looking at that. I'm going to be looking at the 20-minute opening range and then the prevailing options flow and distribution of liquidity to get an idea of intraday market direction. Now, this morning, we do have some data that's already come out. Housing starts and building permits weaker than expected on both, which is to be expected given mortgage rates rising and seeing housing demand slow quite a bit as a result of those firming rates. So home builders slowing their roll as well. We also have a Fed speaker at 1:10 p.m. But overall, this is a light week in terms of macro, in terms of treasury auctions, and of course we have NVIDIA earnings, which is the most seminal, important, life-deciding event of human history coming up tomorrow after the bell. Now let's take a look around some of the other areas of the market. Pre-market, we've got the Nasdaq on screen. It's bouncing up off of its pre-market lows here. Got to take a look at something though. Let's just see. Okay. Price level high lows will reset at 9:30. So this is a new Globex low that we're making pre-market here on Nasdaq. That's certainly interesting to take into consideration. Russell also making a new low and then bouncing off of that low, seeing just a little bit of buoyancy there pre-market, just about 15 minutes away from the opening bell. And 10-year notes getting a bit of a bid, rates coming down just a little bit over the last several hours. And we're looking at a drop of about 5 bips on the 10-year, about 5 bips on the 30-year, about 4 bips on the 5-year, and 3 bips on the 2-year. So rates coming down across the yield curve, but the most pronounced decline is on the 10-year. And you can see that with the way that its futures contract is moving this morning. Gold, it's been a choppy trade. From the European Open, it had a solid bid. Now it's starting to give some of those gains back. When we look at commodity pricing this morning, gold's up about 1%, silver's up about 0.5% over the last day. And I do think yesterday they probably put in some near-term lows. I shared that on the TradeRate Discord with members. We were looking at some of these key levels in gold and silver. I also mapped out some of the pivots for TradeRate members, talking about where we might have some actionable long above areas. And I think that now we are starting to explore the other side of that trade. We've probably put in a near-term low. On silver, I was looking at 30.40. And we've certainly made a push above there, and it looks pretty constructive overall. And then on gold, I think that 26, 24, 10 is a decent area to look at being bullish above. So if we can hold that in the cash session and start to make a push, I think there might be some opportunities to long gold as well. But right now we are seeing that decline. So we do want to see gold hold above 26, 24, 10. Otherwise, I'd be more inclined to take shorts on it. Silver trading higher this morning, but again, had a better pop from the European session, and it's fading that pop here. So we're going to want to watch how these trade during the cash session, because it does look like they could have a little bit of pressure, which is also interesting given rates coming down, that the metals aren't responding positively to that a little bit more. And then as we get into the actual cash session here, I will explore some of the mega cap stocks and how they're trading. Just pre-market, you don't get a ton out of a lot of these. And folks, if you have questions as I'm live here, feel free to post them in the YouTube chat, in the Twitter chat, in the Discord chat, whatever you prefer. And also there's the Twitter chat, there's 2 YouTube chats and a Discord chat. So I'm basically keeping track of 4 different chats here. So I may be a little bit delayed in answering your questions, but I will try to get to each and every one of them. And silver, that pressure intensifying a little bit pre-market here. Same with gold. Interesting to see gold getting pretty close to my pivot. And S&P futures seeing just a little bit of passive selling. This diamond indicator, this red diamond, indicates an iceberg sale order, and there's 156 contracts that have transacted there just so far. And we are using a filtered view of the S&P 500 using TraderMap Pro. So you don't see that kind of annoying band of liquidity around price, particularly during trading hours, because of that filter. So you can actually set this up pretty easily yourself as well. You're just going to want to add TradeMap Pro to your plugins, and then inside of TradeMap Pro, select the contracts that you want to view. I use the Nasdaq and the S&P because they're the ones that have the more obnoxious market maker bracketed liquidity. And then I set that sensitivity pretty high and hit play, and it creates these new contracts. I just add -1 to the end of them. And it allows me to actually pull in the iceberg and stop flow, which makes it really handy. So I don't have to go back and forth between several charts. They've actually continued to update and add new capabilities to TraderMap Pro, which has been nice. I'm just waiting for the ability to pull in icebergs and stops to the subchart, which I am to understand is going to come in pretty soon here. So once it does, then everything will be sort of as I typically set up my charts. I'm also using candlesticks here because I know we've got a lot of folks that are newer to Bookmap also tuning in, and I want to make the chart easier to read for you folks. So I'm using candlesticks for that purpose. On screen, we've got the heat map. The heat map shows where liquidity was and where it is. Where it was is to the left of this white vertical line, and where it is to the right of that white vertical line. And the more red it is, the more liquidity there is, right? So you can see there's a really pretty reasonably chunky bid here at 58.50, 224 contracts sitting there. And I'm just going to tune one other thing here if I can. Let me see. All right. So got about 9 minutes here till the open. Kind of flirting with that key pivot level on S&P pre-market, that 58.8225 level. That is my weekly pivot. So again, more inclined to want to take longs above it and shorts below it. And there's some degree of convergence there. Just above it, we've got the view app and point of control and a rather large sell delta level. So you can see there's some degree of convergence between that 82.25 and 90 level. That is going to be a pretty important area. If buyers are able to push price above it, there's certainly plenty of offers wanting to see liquidity move higher. But as we zoom out, we can see that some of those offers that were above this key area have been pulled back a bit. And we have yesterday's options flow. That will reset in the AM. This is part of the SPX Options Visualizer add-on for Bookmap. It's also available for Motive Wave. That's something you can learn more about by visiting tradery.com/SPX. And order book depth today is kind of light. Once again, 33,000 contract order book depth on the S&P 500 futures. So we do want to see that become more robust during the trading session to give us a sense that there's enough liquidity that we're not going to have these more choppy moves and higher potential for slippage and so on and so forth. I mean, the good news is we don't have any known event volatility catalysts on the books, but if anything was to come out of left field, it could impact the markets more than we might expect simply because there's not as much liquidity on the books. And I'm just going to get my option screener all set up here as we get ready for today's trading session. Pre-market here, we're just about to open in about 5 minutes. S&P 500 down about 0.6%, as is the Nasdaq. Russell down 1.12%, Dow down 0.9%, and vol bid up about 6% here. Spot vol 1683. And again, I do think we have elevated risk of downside. Obviously, we'll respect the price action, the flow, the distribution of liquidity, and how we process that 20-minute opening range and that 82.25 pivot. But overall, just the distribution of risk is more weighted towards the downside going into today, based on momentum, based on sort of that froth we've had from euphoric positioning and sentiment and flow. So it does suggest we could still have more of that corrective impulse in these markets. And one stock that looks really frothy here is Tesla. The call skew on Tesla is wildly blown out to be so lopsided that it's going to be much more challenging for buyers to really move that stock higher. So I think Tesla is one of the stocks that becomes an easier fade here, and certainly a tempting area to take some profits, or if one wants to remain long, maybe sell some bloated call premium, collect some of that. But no matter what, that's one of the stocks where I've been looking at skew in single stocks, and it's just absolutely blown out to levels that are very close to what we saw in the summer before it rolled over and before the broader market rolled over, where that distribution of call skew is pretty common. And seeing futures continuing to climb off their lows ahead of the market open. Take a look at the Nasdaq here, similar look, just building momentum, positive pressure off those lows. The Russell as well has a similar look. Just about everything basically bottomed around 9:06 a.m. pre-market. Crude oil just consolidating here, down about 0.25% in today's trading. Gold bouncing off those lows there, actually bouncing pretty much almost right off my pivot. My pivot on gold is 26.2410, but we do need to see it hold above there, build some momentum, and I think longs intraday could be interesting. Let's move back to equity futures here as we approach the market open. Just less than 2 minutes left. We do see some liquidity starting to build above us here. And it looks like we're going to test that pivot level just in that opening bell area, that 58.8225. And these are programmatically derived pivots. They're based on prior trading action in the market. So I'm not just sort of arbitrarily drawing lines on charts and sharing pivots. This is actually based on analysis of a large swath of trading data to be able to come up with these levels. And if you're on our Discord, you'll see just how uncannily accurate they can be, both, you know, as support and resistance, and then when you move through them, how powerful that can be too. So if you haven't checked out our pivots, I do share them on Twitter here and there, but you can view them on our Discord. You can actually sign up for a 7-day free trial. No obligation. Just visit traderaid.com/discord to learn more. And so markets are open here. We are pushing above that 82.25 pivot on ES into some of these offers above. We do see some of the liquidity below fading a bit, which tends to be a constructive look, but let's not make too much of the open. There's so many cross currents that happen during this opening bell. And we also see a bid starting to form below here, just around 58.3250. Buyers really would want to see us push into this liquidity and chew through it rather effortlessly. That would give you a sense that if we're looking at the market through auction theory, that there's plenty of demand, that buyers have more than enough to push through there and continue moving higher. We do have some key options levels. I'll convert them into ES terms as we discuss them. Our gamma flip level is 59.2275. So if we do push into positive gamma territory, that's very constructive for the market, tends to lead to more upside. On the other side, you've got a put wall at 58.2375. And if we do start to push below there, at that 58.2375 level, that does open up further downside. So for now, we're testing the VWAP from below. We're pushing above the now lowered point of control, and we're getting into that zone of offered liquidity where there's just about 300 contracts offered right above price here. What we'd want to see is buyers push through that somewhat effortlessly if we want to be bullish of this, because that would tell you they have demand. So far, even with this passive order flow supporting the tape, we're not getting that push. So we'll watch. The first 10 minutes or so tends to be a little volatile because you have a lot of order flow coming in, even some that's left over from the prior day that wasn't fully executed. And we can see there's actually a pretty sizable bid down here, convergent with the Gamma 2 level. This is what I like to see when there's these areas that give us more than one indication that a level is important to this market. And so that's going to be 58.7375. That'll be a key area to watch here. And that is a very large bid. That's 1,037 contracts there. So to give you a sense of scale, that's like $300 million just sort of sitting there on the bid. In notional terms, but nevertheless, it's still a lot of money. And initially, buyers are not able to chew through that liquidity overhead. They're getting rejected there. If we move below that point of control, I'm thinking we may start to get pulled into that Gamma 2 level where there's that very large bid just around 58.7375. So let's watch here. For now, it's sort of consolidating. We'll take a look around some of the other parts of the market as well. Nasdaq getting a push to new session highs and now starting to break down to session lows. Obviously, this is just opening range pricing. These highs and lows are based off of where we were from 9:30 a.m. into the present. But some volatility there. And again, that rejection not looking great on Nasdaq. Russell doesn't seem to care. It just wants to move higher. There's no slowing its roll so far from its lows. So the Russell now down about 0.9%, S&P and Nasdaq down just over 0.5%, and Dow down 0.75%. Spot vol bid up 5% to 16.63. Let's take a look at treasuries. Not much happening in the 10-year. Gold getting just a little bit of a bid back from these lows. Remember, it's not anywhere near the lows we saw pre-market, but nevertheless, we're still watching that pivot level on gold to see if we're able to get a decent thrust above it. That's the 26.2410. That could set up some decent trades to the long side here. Another area to watch would be this VWAP at 26.35. Silver, similar to gold here, just sort of fading a little bit more on the open. But overall, as long as it's above 30.40, it does seem constructive on a swing time frame. And let's look at some of the mega caps here. As promised, we've got Apple on screen. And boy, that's a lot of liquidity on the book for Apple, especially overhead. Just enormous amounts of offers. So that tends to give you a sense that there are folks in the market that are more interested in higher rather than lower prices. But it also puts the onus of proving that demand exists on the buyers, because that's a lot of supply. So we're going to want to watch that carefully. We've got Amazon on screen. Little bit more even distribution on Amazon, but about in excess of 300,000 shares offered versus bid. We can see that delta on the lower right side. And Alphabet, kind of a similar look here, more offers above near price. So there is an interest here in pulling price higher, and the burden of proof is on buyers that they have the demand to do so. Meta, lots of liquidity just right around price here. That's interesting. You don't often see that. But overall, you do see a lot more interest in higher prices on this stock. That delta of 313,000 between bids and offers gives you that impression, as does this heat map. And the big level on this one, once again, is $600. That's where there's 90,000 shares on offer, quite a bit above where we are now. Microsoft also has that sort of similar delta to the upside. You can see that near spot, it's pretty evenly distributed, but if we look at just offers versus bids, there's a difference of 491,000 favoring offers. So again, more interest in upside in Microsoft. NVIDIA, somewhat similar look, about a 20% delta favoring upside, 2.2 million shares in excess, looking for gains. And you can see the big daddy level, again, 150. This has been the level we've talked about, gosh, I want to say for 2 weeks now. There's been this resting limit offer sitting at 150 with around 2 million shares. Today it's 1.82 or 1.83. It's still a huge amount of liquidity overhead. And it does show you there is still some interest in higher prices here. But again, burden of proof is on the buyers. And Tesla, doing what Tesla does, just sort of bouncing around wildly here. It does have a different distribution, however. Folks are more interested in bids than offers on Tesla with a delta of 868,000. So that does tell you there's a little bit more interest in lower prices on this stock. Maybe other folks are looking at the skew or just the magnitude of the run, but that's something to keep an eye on. Let's go back to the S&P 500 and have a look. And we are pushing above my 58.8225 pivot here. So we are starting to look a little more constructive on S&P. Again, we do want to see buyers be able to take out these offers overhead a little more effortlessly. So far, it's been pretty clean resistance. If we zoom in, you can see we just sort of wick into it and get rejected. We can also see buyers pulling up the point of control, and it looks like they're going to try to gun for a new session high here. Let's watch carefully as they start to push above that point of control in VWAP. So markets off their lows, S&P down about 0.5%, Nasdaq down 0.4%, Russell down 0.8%, as is the Dow, with vol bid up 4.28% to spot 16.53. And we are starting to push through. It looks like they just pulled those offers overhead, though. It doesn't look like they were filled. It looks like they were simply pulled off the books. Maybe a little bit of a fill in that first one. You saw that passive sell and that stop out. But overall, these offers that were above thinning out. The bid below at 58.73.75, still pretty firm, 1,024 contracts sitting there. And that's now the second largest level of gamma outside the vol flip. Or the vol trigger, I guess we could say. And that vol trigger level, 5823.75. So a little ways below, which would put us down to S&P 5800 if we're going to calculate the delta between cash and the futures here. Buyers trying to make another push here. We're going to take a look at the Nasdaq. Nasdaq actually looking a lot better than the S&P comparatively speaking. It is pushing to new session highs, and you do have a reasonably large offer. This contract is not very liquid. There's just about 6,000 contracts on bid and offer in the order book here. And you can see overhead, there's this 122 offer. So because of the rather thin order book, that becomes a more consequential amount on offer. That's like having 500 on offer on the S&P contract, basically. So that can act a bit like a magnet, kind of pull us into it and get that liquidity released into the market. Russell still continuing to build higher, but just pulling back a little bit, retesting the point of control, but overall looking pretty strong from its lows. Still down more than the rest of the indices, but looking like it's trying to stage a bit of a comeback. Gold continuing to chop sideways here, consolidating. Let's take a look at some of the mega cap stocks again. So Apple just sort of trading sideways here at the open. Let's look at some of the pricing. So Apple's basically even here. It's basically flat. Amazon down about 0.4%. But it does look like buyers on Amazon are trying to make their presence a little more known here. We have pushed to new session highs around 201. Alphabet or Google, whatever we call that one these days, that stock is up just about 0.5%, so the opposite of what we're seeing in Amazon. It continues to push towards new session highs, and again, you do see a decent amount of interest in higher prices here. That 177 level, probably the next area that's important to watch because there's a reasonable amount of shares on offer. But 180 is a monster level with 48,000 shares on offer there. Then there's Mark Zuckerberg's Meta, which is flat. It's pushing off the lows to being flat now. We'll just go ahead and pop that on screen like so. Zoom in a bit. And we can see it is pushing to new session highs here. And 555, about 10,000 shares on offer there. Not quite as big as 560 with 22,000, but nevertheless, there is interest in higher prices. We can see that delta between bids and offers favoring offers by about 285,000. Microsoft has a lot of interest down here at 410, 31,000 shares on bid. And this morning, the stock is down about 0.6% so far, but off its lows. NVIDIA, not to be left behind in any attempt to rally off lows, is actually up 2% today. And we see a reasonably large amount of interest here at 145 with 242,000 shares on offer and a 2 million delta between offers and bids favoring offers. And then there is Elon Musk's Tesla, down about 0.1% here with a rather large offer overhead at 340 and a delta favoring bids, unlike the rest of these Mag 7 stocks, at about 912,000 delta. So I'm going to move back to the S&P futures here. We can see we continue to grind higher. We crossed above my pivot level of 82.25. We've got to respect that and the push above the point of control and VWAP. So for now, the path of least resistance does appear to be moving higher. And we also see those offers coming back on the books at higher levels, which is also constructive, as is seeing this very large bid disappear, right? So that's telling you there is more interest here just in the order book that we're seeing near price in higher prices. Now we do have a delta of about 2.5 thousand on the bid versus the offer. So it's not a high level of conviction that we see looking for higher prices yet. And if we're looking at this through the lens of the opening range, we're just about 5 minutes away from forming that 20-minute opening range. And we've got about a 12 handle, 12 and a half handle opening range so far. Nothing too exciting of yet. Ariana, so you can't do Forex directly, but there are futures contracts for currency pairs that you can view in Bookmap, like the euro, the yen, etc. If you have ICE, there's the dollar contract. So while it might not be Forex pair trading in its purest form, you can still observe the futures contracts, and some of them are liquid enough that there is value in that. So maybe that's a helpful way to look at it as well. And no, Bookmap doesn't look at credit spreads, but you can look at credit ETFs, and you can look at futures contracts for bonds, notes, etc. So, you know, it's much more about looking for order flow and liquidity in liquid trading vehicles to try to find opportunities, or at least where there may be key levels of interaction. And flows today, off the open, are favoring more puts than calls so far. That is creating a little bit of a drag effect, that put flow coming through, hitting the tape. Market makers have to hedge that by selling S&P futures contracts short to hedge the delta between the put contracts they're selling and their own order books to make sure they're able to pay out the contracts and not lose money. So that's one of the reasons that options have a sort of asymmetrical impact on the markets, because the other side of that is how the market makers have to hedge. So something to take into consideration, and one reason why we very carefully watch options flow at TraderAid and have built a number of unique tools to do so, including this SPX options visualizer, which on screen you can see those flows are starting to hit the tape now. Now, it is interesting to note that the call is the most active contract on the book so far for right now. But nevertheless, those flows do matter. We really intently watch options flow in SPX because it has an outsized impact of setting price in the futures. And to give you a sense of scale, the S&P 500 index options trade about 1.2 trillion of notional every day, trillion with a T. About half of that said to expire the same day, about 80% within about a week. And if we look across all of the major equity futures contracts in the US, S&P, Nasdaq, Russell, and Dow, they trade about 500 billion of notional a day. So it really is the tail wagging the dog. Options are the market, and it behooves us as traders to pay very careful attention to what they're telling us. So we're just about to form that 20-minute opening range here on S&P, Nasdaq, Russell, gold, crude, etc. We do see some more downside pressure from that put flow coming through on SPX. And if we do push below my pivot, that is also the session low. So we want to watch that 82.25 level pretty carefully here. And we are seeing now call volume starting to pick up a bit. And we see that bid back at Gamma 2, much smaller than it was before, but nevertheless, that gives us a sense that's an important level. And we are crossing below my 82.25 pivot. So I'm now more inclined to look at this market bearishly intraday and looking for fade opportunities. We can also see there's some degree of convergence between the warm put and this sizable bid at 58.50 that's been on the books for a little while now. We're also starting to push below that 20-minute opening range, which has become a little chunkier now. It's about 18 handles. Nothing extraordinary, but it is also a 32,000 contract order book depth in the S&P. So it's not improved from earlier. If anything, it's actually worsened a little bit from earlier, giving you a sense that this market can whipsaw in both directions. So if one is day trading, small size, wider stops are going to likely be necessary to stay in the game. And much more careful selection of trade setups. Backtesting that pivot level now, 82.25. Seeing just a little bit of a push. But it so far still looks to me like we're more inclined to kind of make a move lower here. We'll see what we get here in the next 8 minutes. Let's take a look at Nasdaq here. Nasdaq is quite volatile overall. It is actually stronger than the S&P. It's down just about 0.4% versus the S&P down 0.5%. The Dow is now the loss leader. Well, it was for a moment there. It was down 1%. Now it's down about 0.9%, neck and neck with the Russell. Nasdaq making a bit of a comeback here, testing the VWAP level, now pushing above and looking like it wants to test that point of control. So let's take a look at some of these mega cap stocks, getting back to that, seeing where the strength is coming from. Apple off its lows, but still consolidating. Amazon making new highs, so that could be part of it. Alphabet also making new highs. Meta falling off after making new highs about 6 minutes ago. Microsoft just sort of consolidating sideways here. Nvidia consolidating sideways, testing VWAP. And Tesla making new highs. So 3 of the 7 making new highs in the Mag 7 intraday, and that is helping to give us a little bit of a push. S&P retesting the point of control and VWAP convergence level here, and so far rejected. And we're seeing call flows actually pick up now quite a bit. So kind of reversal of fortune, if you will. That puts the intraday put call ratio at 0.77, which is unusual to see this much call volume picking up so early in the session. It does at least give me a little bit of pause wanting to be too negative on the market. If that flow continues, it is very likely to pull this contract higher. And you can see it up here in the SPX options visualizer. That is where that hot call contract is in ES terms. So we've pushed back above my pivot. We're just now testing VWAP and the point of control where there's some convergence. And so far, just consolidating here on S&P, not a particularly exciting tape. We do see pressure in that most active call strike continuing to build. And you can see both the warm call and hot call. That is the second and most active calls, 14,000 total volume versus the two most active puts, 4,000. So there is a pretty significant amount of excess, about 3.5 times in call flow on the top two strikes versus put flow, which tends to be constructive for the market, tends to lead price higher. So we'll be watching those flows develop here. And that asterisk by the hot call also indicates the put-call ratio favors calls across the entire S&P chain of about 10,000 options contracts or so, across all expiries and strikes. So that hot call implied level is 59.3375. The warm call, 59.4375. The hot put, 58.2375, and the warm put, 58.1375. And intraday put call now 0.79, pressure building at that hot call now. So I do think we could move higher on this. Just looking for a push above the point of control and VWAP, which we're starting to see now. We also have an implied passive bid here. There's a iceberg buyer here who's not very aggressive, but they have at least executed some contracts to the buy side. Then we also had a decent little stop run back here, 349 contracts stopped out. Let's take a look at the Nasdaq. Nasdaq is very choppy here, but it is trying to make a push above VWAP and into the point of control. Small caps, also Russell looking like it's made a nice push off its lows. It's above the point of control and VWAP, so looking pretty strong. Apple reaching towards session highs. Amazon recently making new session highs, looking like it wants to do so again. Alphabet recently making new session highs, pulling back just a little bit to consolidate. Meta just continuing to consolidate, but it did make session highs about 10 minutes ago here. And Microsoft just moving sideways below VWAP and point of control. NVIDIA, kind of a similar look, more consolidation. And Tesla recently making new highs just about 3 minutes ago. And folks, if you're talking about volume profile, I would suggest focusing more in the areas where there's a lack of volume than where there's a lot of volume. So those low volume nodes tend to be more decision zones and tend to be more consequential for price discovery, whereas high volume nodes tend to be more sticky. Price can get kind of stuck there because we've seen market participants want to transact there. So just a little bit of auction theory applied to volume profile. If someone doesn't want to transact somewhere, then that means it's a decision zone. They have to very quickly decide, do they want to move higher or lower, because they're probably not going to stay in that low volume node, that area of decision. So just moving sideways here, overall, flows do suggest we could move higher from the options standpoint, but we do want to break above this highest price level from the 20-minute opening range, which is going to be about 58.94. If we don't make a break above that, then we may just have a sort of sideways choppy trading session. I also need to see price stay above that 82.25 pivot level. Otherwise, I am inclined to get a bit more bearish. But overall, I think we have the chances of upside to sideways being the most likely outcomes so far today based on options flow. I'd lean more towards upside just because of how aggressive these calls are transacting up at higher levels. And based on the premium distribution, it does look like there's a decent amount of those calls being bought here as well. So we're going to wrap up the stream here. I appreciate everyone tuning in. If you want to get up to 40% off Bookmap, visit TraderAid.com/bookmap. If you want to grab the options visualizer, it's now available for Bookmap and MotiveWave. You can do so at TraderAid.com/SPX. And if you'd like to check out the TraderAid Discord, we have a 7-day free trial right now. Visit TraderAid.com/Discord to learn more. Thanks everyone for tuning in. This has been Markets and Mayhem with Back to the Futures. I'll catch you next Tuesday at 9 a.m. Eastern.